Welcome to part 2 of our H.R.1 or the Big Beautiful Bill deep dive. This week, we're breaking down the No Tax on Overtime Act. Do you work overtime? Do you manage a team that depends on it? Whether you're clocking extra hours or cutting the checks, this bill could shake up how overtime pay gets handled come tax time. We're digging into who benefits, what's missing, and why it matters. Welcome back to Full Throttle Finance, a financial literacy podcast where we take complex financial topics and we break them down into fun, relatable discussions. My name is Felicia. I'm your CEO at Clean Bee Consulting. And I'm Allie, co-host and senior bookkeeper here. Whether you're running a race program or just getting your business off the ground, we're here to help you make small shifts and that drive better financial performance. All right, last week on the podcast, we kicked off our breakdown of the massive H.R.1 legislation by diving into the No Tax on Tip Act. We explained how service industry workers could deduct up to $25,000 in reported tips and who qualifies, and what counts as a tip, and why the IRS is about to overhaul how tips are tracked and reported. Whether you're a server, a stylist, or a small business owner, this episode covered what this bold new policy means for your taxes in the 2025 and beyond. Full disclosure, the episode from last week, the No Tax on Tip Act, we actually recorded that episode on the 9th of July. So that was before there were some updates made to the IRS webpage. So before we jump into what we're going to talk about today with overtime, we wanted to make a couple of clarifying statements based on some updates that the IRS has added to their website. So as of July 14th, the IRS has officially put their policy about the no tax on tips deductions and how they'll work on their website. That way it's free, accessible information for everybody to visit and use, and so that they can, prepare for this upcoming tax season. One of the changes from last week's episode that we wanted to go over is that we said that this deduction is going to be good for 3 years. We said 2025, 2026, and 2027. And there's language in the bill that suggests that potentially it might not be 3 years. It might seem like 3 years because you think 2025 to 2028, and then when you subtract 2025 from 2028, it's 3 years. But it's actually for the tax years that happen between 2025 and 2028, which actually means that you could probably take this deduction for 4 tax return filings starting in 2025. So on the IRS website, it says effective for 2025 through 2028. And to me, what that says is your 2025, 2026, 2027, and 2028 tax return, you should be able to take this deduction if you are eligible. The second update that we wanted to make sure that everybody was aware about was in our last episode, we said that, and it was generalized in the bill, that by fall of 2025, the IRS was going to need to publish a list of occupations that customarily and regularly received tips on or before 12/31 of 2024. And so now the IRS has come out and said that by October 2nd, 2025, so now we have an actual date that we can expect to have this list of occupations that are eligible. It's no longer fall 2025. It is a legit date, October 2nd, 2025. So, as always, we're going to keep our eyes on all of these updates and these changes. And as soon as that list of occupations becomes accessible, we'll make sure that we do another episode and keep you in the know about what occupations are able to take advantage of this no tax on tips deduction. Yeah. All right. So this week, like Felicia said, we're going to be talking about the proposal to let workers deduct a portion of their overtime wages from their taxable income. So we'll walk through the actual language, what it could mean for both W-2 employees and business owners, and how this policy might play out in real life. Exactly. Under the current system, overtime is taxed just like ordinary income and all other wages that you make as an employee. But this bill creates a special carve-out of up to $12,500 per year that would be allowed to be a deductible amount from your taxable income. And for joint filers, that number jumps up to $25,000. So if you're a single individual filer, up to $12,500 of legitimate overtime wages that are reported correctly on your tax forms from your employer can be deducted and can reduce the taxable income in which your taxes are calculated at the end of the year. And most importantly, this applies to overtime that is defined by Section 7 of the Fair Labor Standards Act, which means time and a half for any hours that are worked in excess of 40 hours per week. It's not a blanket deduction for just working late. It's very specifically tied to the FLSA covered rules. And so this is important to note because for states like California, the state has their own regulations that state that when an individual works in excess of 8 hours per day, anything in excess of that 8 hours should be calculated at time and a half. FSLA doesn't matter. You could work 9 hours one day, 10 hours the next day, and then 2 hours, and then 2 hours after. You don't exceed the 40 hours in 1 week. So that's very important to understand and to distinguish, especially if you're an employer that's got to deal with updating these tax forms at the end of the year. The overtime eligible deductible wages are only going to be permitted on wages in excess of 40 hours per week. So you might need to distinguish California overtime separate from FLSA overtime, which is probably going to get really tricky on the administrative side of things for tracking, right? So just an important note there that not all California overtime or states like California that have their own policies like that to pay out in excess of a day's hours is going to qualify. And it's going to be very important that this gets tracked correctly at the employer level so that employees can take advantage of this deduction.
I feel like this is going to get confusing when it gets time for, everybody to file their taxes because, like you just said, in California, these people are going to be like, well, I was working overtime per my employer, but like, if you didn't work over 40 hours, they don't count.
Exactly. Which, again, if this maybe wasn't just all thrown into one large bill, we might have had a little bit more time to think this through.
And just to be clear, this is a deduction. It's not a tax credit. So it's going to work just like the no tax on tip, that it's reducing your taxable income, not the tax bill itself.
Correct. So if you earned $55,000 in regular wages and $10,000 of that is qualified overtime, let's say, then your taxable income is going to drop to $45,000 under this rule before you even take the standard deduction. So that, honestly, just that on its own eliminates any of your wages being taxed at a 22% tax bracket. And then once you take the standard deduction into play, that's going to lower the amount that's taxed in that 12% bracket as well, too, right? So it's an above the line deduction. That's what we call it, which means that people who take the standard deduction can benefit from this just as much as people who actually itemize their deductions when they file their taxes. It's also designed to support the middle income earners. This deduction begins to phase out just like the no tax on tips with the modified adjusted gross income when it exceeds $150,000 for an individual or $300,000 for a married couple that's filing jointly. Then you're going to see that deduction for every $1,000 that you've earned over that $150,000 to $300,000 bracket. If you make $160,000, you've exceeded that modified adjusted gross income by $10,000. So the amount that you can claim for the overtime deduction would normally be $12,500, but since you're $10,000 over the $150,000 threshold, you've got to take $100 for every $1,000 that you're over and reduce your deduction amount. So that's 10 times 100, so that's $1,000. So instead of being able to take the full deduction of $12,500, if you make $160,000 salary per year and $10,000 of it is overtime, you'll be able to take up to $11,500 instead of $12,500. So you can still claim your full $10,000 worth of overtime in that example, right? Because even though you've made $160,000, the amount you can deduct reduces down to 11,500. But if you've only clocked on your W-2 10,000 of overtime, you're underneath even that adjusted bracket, so you can still take advantage of it, which is cool, right?
It's funny. I was watching you go deep dive in your brain, and you do what I do when you're deep diving. I'm not looking at the camera at all.
Nope.
I'm really thinking really hard.
It's because there's a visual going on over here, and there's a math equation.
I do the same thing.
How our brains work, people. IRS wants a clean paper trail here. That means the deduction is only allowed if your social security number is included on your tax return, just like the new tax on tips, and no anonymous pass-throughs, setups, or no gray areas, right? Like you just have to be a citizen, or you have to have the appropriate work authorization to work here in the United States. But as long as you have that present on the tax form and you have your overtime in the right box on your W-2 that your employer issues you, then you're able to take advantage of this deduction. The idea is that it creates more accountability. Employers need to report overtime clearly and correctly. And I will let you know, as somebody who's been processing payroll for probably more than 30 companies, I'd say at this point in my entire career, there are a lot of companies out there that do not track overtime correctly. Or maybe they track it, but they don't report it correctly and it doesn't flow through to their payroll properly. And that's part of a lot of the cleanups and setups that we do for our clients, is to fix those issues, because A, it's the right thing to do. It's the legal thing to do. And B, it helps set the stage for when things like this happen. You don't have to revamp your whole system. Your employees can literally just take advantage of it right away, immediately, and there's no questions asked. Higher wages paid out at an overtime rate means more FICA taxes. So again, this is a push on employers to report wages correctly, and for employees to hold their employers accountable for reporting those wages and those earnings correctly. Because if overtime wages aren't reported correctly, then the employer is shorting the employee out of the possibility of even taking this deduction at all. And what your FICA taxes are, the FICA taxes are the mandatory taxes that have to be taken through payroll that are split 50-50 between the employer and the employee at 7.65% each. And those taxes get collected through payroll, and they go to fund very essential government programs like the Social Security Fund and our Medicare fund.
Payroll lesson of the day.
Yep. So just keep hitting that in to people.
I love it. So here's the good news. This deduction starts January 1st, 2025. That means any overtime you've worked this year will count towards the deduction when you file your 2025 taxes next spring. So just make sure your pay stubs and W-2s reflect your overtime correctly.
Yeah, and don't wait until the end of the year to check your pay stubs, right? Like, you create more chaos for your employer, you create more chaos for yourself. This sense of urgency gets created at the end of the year when it's already so crazy and so busy anyways. Get ahead of it now. Look at your pay stubs. Your pay stubs will show you what your current earnings are, and they'll show you what your year-to-date earnings are. And you'll be able to see, do I have overtime in an overtime bucket on my pay stub? If not, and you know that you've worked overtime, you need to bring that up to your employer immediately. And same thing, I know I've made tips, but on my pay stub, is there a section that says tips on there? Because if there isn't, then that means it's being reported as your wages, not your tips. And that means that it's not going to be reported correctly come W-2 time at the end of the year with your employer. So if you are an employee who receives paychecks and receives pay stubs, let this be your reminder once in a blue moon to go in and actually vet the information that is on your pay stub right now. And, this is also not a permanent thing either. The deduction is written to expire on the same timeline that the No Tax on Tip Act expires. So you can start claiming it with the tax year 2025, and then it expires in 2028. So by my calculations, there are 4 tax years that you should be able to take advantage of this deduction. And this kind of sunset clause isn't unusual for tax legislation, especially when it's part of a broader political package. But it does mean that this benefit has a shelf life. So you're going to want to be strategic if you're in a field where overtime is seasonal or if it's project based, and you're going to want to make sure that it's reported correctly. I think a lot of people just assume that tax breaks are for the rich and that any tax breaks that happen, it's because they're wealthy and because it's written that way. Like, this is how people become rich. They pay attention to the tax code. And when these little 4, 5, 6 year tax breaks come up, they take advantage of it. The issue is that, a lot of people with wealthy money can pay people like Allison and I to keep track of this, right? And let them know the money that they're leaving on the table, or let them know about these things that they could take advantage of, which maybe the masses don't have access to. But that is exactly why we are committed to putting this type of content out here, is for you guys. It's free. Make educated decisions for yourself. Are my tips, are my overtime earnings, are they calculated correctly on my W-2? If so, why would you not take advantage of these deductions? Don't let your politics get in the way of lowering your tax bill. That's what I'm trying to say.
But the IRS does have some catching up to do too. The bill gives them until 2026 to adjust the withholding tables and update how this gets reflected in paychecks, even though individuals could take advantage of the deduction in 2026 for earnings in 2025.
Exactly. And just to clarify, this is not going to change anything about what your employer withholds from your paycheck. Your overtime will still be taxed as usual throughout the year, and it's going to be eligible to be taxed based on federal taxes that are in place, as well as the state taxes that your state might have in place too. Where you're going to see this benefit is when you actually file your taxes in 2026 for 2025. If after you take these deductions, it shows that you've overpaid to the authorities, you will get a refund. Or depending upon your tax situation, if you still owe money, it will be a credit that goes against the liability that you owe, bringing that balance down for you. Nothing's going to change throughout your normal payroll cycles. That all stays the same. This is at the end of the year when you file your taxes with the government.
So now let's go over some pros and some cons. So on the surface, this looks like a win, especially for people who rely on overtime to make ends meet. And there's some solid benefits here, definitely. First, it puts more money back in someone's pocket if you're doing shift work or covering weekend hours or stepping in during a peak season. This could mean like a much larger tax return at the end of the year.
Yeah, it's not just that, right? Because it's an above the line deduction. Even folks who take the standard deduction and don't itemize all of their expenses out, they can still use this deduction. You don't need to itemize to take advantage of this. Like, my significant other is a individual who works as a motorcycle technician. And during busy season, they often have him work 6 days a week. And so he does get overtime for at least one shift every week during peak season because everybody wants to come in and have their motorcycle serviced. So he is just a regular guy. He doesn't have anything special about his taxes, really. But because his employer reports these overtime wages correctly and pays him out correctly, it's going to flow through to his tax form where he can just take that number on the box and deduct it from his tax bill that he owes when he goes to file his taxes. And he's still going to be able to take that standard deduction for his very more or less simplistic tax situation, right? So that's it. This is made to benefit real people. And that's how the No Tax on Tips Act works as well too, right? And, this might also improve morale in industries where overtime is the norm. Like, think healthcare, Think logistics, hospitality, like I just mentioned, a motorcycle technician, your race crews, and even seasonal track workers, right? Like if employees know that they're going to be able to reduce their taxable income by an additional $12,500 at the end of this year, they might be more willing to show up for an extra shift when you need them the most during your busy season, right?
I mean, I don't know about you, but I'd be willing to work a little bit more overtime if that's what it meant for me too.
Right?
It also forces some accountability. Overtime has to be broken out and reported clearly on the pay stubs and tax forms in order to be deducted.
Agreed. And this can help clean up gray areas in labor reporting, especially in industries where underreporting or rounding down hours still happens. Those places that might not use a time clock that are like, oh, I think I worked about this amount of hours, or I think Joey worked 8 hours, or I have scheduled Joey for 8 hours a week or 8 hours a day, right? And Joey maybe works 8.5 hours every day in reality, right? This will help hold employers more accountable to do the right thing and keep the adequate time keeping records on file that they're supposed to. But like everything tax related, there are trade-offs. For starters, like I said, this is temporary. This provision is set to expire after 2028. So that creates uncertainty, especially for people who depend on like consistent overtime as part of their financial planning. And if they change the way they live and the way they work over the next 4 years, like where does that leave them in 2029 kind of a thing?
Yeah, 100%.
And secondly, it doesn't help contractors or freelancers or self-employed folk like me, right? Like even if I work more than 40 hours a week, which I definitely do for, a good half of our year, right? I don't get to take advantage of that. So it's tied specifically to FLSA covered employment, not just working a lot. And it adds complexity with states like California where they calculate overtime differently, right? So there are definitely some cons, I would say, or things that honestly I feel like were rushed through the process because, again, this got passed in one giant bill.
And just to be clear, it doesn't reduce your Social Security or Medicare taxes. This is a federal income tax deduction at tax time only.
Exactly. Plus, it could put a little bit more pressure on small business owners. Like if you're not already breaking out overtime separately in payroll, this is your indicator that you need to change that and retroactively change that probably too. But, for small businesses that don't have fully baked payroll workflows, right? This could mean new system. Like this could mean new systems. It could mean software upgrades. It could mean adding people to your staff like Allison and I to help facilitate payroll, which is an additional cost that maybe you weren't expecting. Or just in general, if you're taking on this burden yourself of trying to figure it out because that's your only option and you want to do what's right by your employees and do what's legally required of you, right? It's just more admin at the end of the year anyways, too. And, let's not forget, if payroll systems don't label overtime clearly, a lot of workers might miss out on this deduction just because the reporting wasn't clean, and that's on the employer. It doesn't matter if you use Gusto or if you use ADP or if you use Paychecks or if you use JustWorks. Like, the state's going to come to you as the employer and say, you were in the wrong, you should have been doing this correctly. Now you pay the penalty and fines and you're going to fix it. And these are what the requirements we have in place for you to continue operating your business moving forward is going to be.
Yep. Check your work.
So don't inadvertently steal from your employees because you as the employer were not prepared.
I like it. And we'll be keeping a close eye on the updates. And now it's a great reminder to track your hours, check your pay stubs, and make sure your overtime is being reported accurately. But that is a wrap on today's episode and our deep dive into the Big Beautiful Bill Part 2, the No Tax on Overtime Act. Whether you're cheering it on or have questions about how this could impact your paycheck or your payroll, we want to hear from you.
And if this episode got you thinking, make sure that you drop a like or leave a comment, and don't forget to subscribe to our channel so that you never miss an update. We're going to be following this piece of legislature very closely between now and tax season, so we would love to keep these conversations going with you guys. Thank you so much for tuning in, and we'll see you next Friday as we continue to break down these complex topics.